want to talk about is how a TFSA is treated if you are a Canadian citizen and you suddenly become a US resident, right? When you become a US resident, your TFSA loses its tax-free status. What that means is RSPs and TFSAs for us, if you earn money in them, there's a tax-free component either through the contribution at the beginning or the withdrawal at the end. The TFSA in the eyes of the United States government is this is a non-registered account, which means that income gains from dividends, capital gains within it are going to be taxed. And if you pay them in the States, there's no such thing as a foreign tax credit for those because a foreign tax credit implies that it's income in Canada and United States, but this isn't the case. The TFSA is only seen as a taxable tool within the US construct. On your US return, Form 1040, you're going to have to include income in Schedules B and Schedule D that you wouldn't include on your T1 return in Canada. That's why it's important that if you plan on moving to the States, make sure that your TFSA is handled correctly. Depending on how much passive income you're earning through a TFSA, that could be thousands of dollars. And we're not even talking about the compliance needed to make this work, all right? Like a cross-border CPA is going to have to do your Form 3520 and all that stuff, computing income that you might be receiving in Canadian dollars into USD on the IRS's 1040 return. All that stuff can be a headache, so definitely be mindful of that. If you have a friend who is considering moving to LA, New York, Texas, Florida, save this, send it to them, because I promise you there's someone out there who is not aware of this. It's not something that flies on the news. It's not something that's talked about every single day. You only have that visibility if you've experienced it or happen to be involved in cross-border tax stuff. The last thing you want is for your worst TFSA mistake to have been just holding it.